So I'm Fran Boait. I'm the Executive Director of Positive Money, and Positive Money campaigns for a fair, democratic and sustainable money system. We were set up in 2010, so one of a handful of organisations set up after the financial crisis, and we produce research, we also campaign, and we advocate our ideas to politicians and policymakers. So we were established after the crash because no one was talking about how money is created. And money is created by commercial banks when they make loans. So if you or I go into a bank to take out a loan, money is created right then and there, and so is a debt. And we quickly realised this understanding has kind of disappeared from economics, the way it's taught today, also from like general understanding of politicians, central bankers, regulators. And so initially our kind of mission was to educate and to bring people aware of this understanding. And actually that resulted in the Bank of England coming out in 2014 with a paper which said, actually, contrary to the way it's taught in most economics textbooks, commercial banks create money when they make loans, and there's no real limit on that amount of lending. And so since we've established that, we're also trying to highlight the way that the current monetary system works is dysfunctional and is leading to a lot of different problems we can see around us, including high levels of inequality, high levels of debt, private debt, unaffordable housing, and this economic system, financial system, which crashes spectacularly as we saw in 2007, and is very unstable. So we work on this on a variety of proposals. So about 70% of all the money that they create, they lend into property and financial markets. And that results in, most developed economies, the UK, but also Europe and the US, they've got an economy that is skewed towards having an oversized financial sector and housing bubbles. So basically, wherever you put direct money and credit will be where your economy grows, and in the UK especially, we've seen the growth of a financial and property sector which has been fueled by bank lending into those markets, and that can have that has a lot of problematic effects. So putting money into mortgage lending actually increases house prices, and you might think, well, that's good, more people can own property, but actually what we've seen is a decline in home ownership over the time that bank lending to property has increased. So all it's really doing is pricing people out of owning their own homes and creating a bubble, an asset bubble, which isn't socially useful. The kind of key problem is that now a lot of politicians are saying we need a more balanced economy. We need more. We need to grow our productive sectors, our kind of real economy sectors. We need more green energy. There's a lot of things that we need money for. However, we've got these huge banks who are designed just to lend to property and financial markets. So how we can actually rebalance the banking system so that we have an economy that works in the interest of society is a challenge, and looking at money and monetary policy is like a way into thinking about how we can reform that system. We do. We work across several different areas. So we were founded with a very radical proposal, and that was that commercial banks create money and they've abused that power, and actually we can really change the banking system very quickly overnight by taking away that power to create money. And that would actually have the massive benefits of ending too big to fail banking. It would remove implicit subsidies to banks that they have at the moment, and it would bring the payment system into public hands. So banks could no longer hold governments hostage to bail them out. So banks would go back to being true intermediaries, how most people imagine them to be, which is where they take savers' deposits and then they lend to borrowers. The way it actually works currently is they lend to borrowers and that creates money. But under what we call a sovereign money system, they would actually have to attract deposits in order to lend. So we see that as being a really beneficial way forward, and we've written a book called Modernizing Money, which outlines how that could happen. But we also realise it's a big change to the current money and banking system, and so we're looking at other proposals that could happen now. So one thing we are campaigning on at the moment is current monetary policy. So at the moment, central banks across the world are doing a program called quantitative easing. And that is where they are creating vast amounts of money, supposedly in the public interest, but that money is going into flooding financial markets. They are buying bonds, mostly government bonds, from financial institutions, which include pension funds, insurance companies, and banks. That is inflating those asset prices and actually making the rich richer. Most people that own stocks and bonds are the wealthiest people in society. So all of this QE money is doing is actually flooding into financial markets, getting stuck there and making the rich richer. It's doing very little or even nothing for ordinary people, and actually has a negative effect because it's increasing this divide. We've already got high inequality and it's making the situation even worse. So we're calling on central banks. We're mostly working in the UK with the Bank of England and in the Eurozone with the ECB, the European Central Bank. And we've got a number of economists to support our ideas, saying quantitative easing doesn't have to be done in this way. We can do it for the people instead. So we have a campaign called Quantitative Easing for the People, create money for people and not financial markets. And we're really rallying support, both supporters on the ground. We've had stunts outside the Bank of England covered in newspapers, but we've also got around 100 economists supporting the idea that it can be done differently. And we're working with politicians as well to give them the tools to scrutinise central banks. You know, central banks have been out of the public eye for a long time, and we really see our role is bringing them back in to scrutinise how they're doing policy, because we think if we're going to have a money and banking system that works for society, we need to really question central banking and get them to reform their policies. So one of the biggest obstacles that kind of underpins everything we do is the way that economics is understood by mainstream economists. So at the moment there's a very narrow school of economics which dominates public discourse, which is called the neoclassical school. And that has really resulted in no main economist predicting the financial crash, no main economist having good solutions for how we deal with the crash, and still we see the understanding of money, banking, markets being completely nonsensical, really, in a lot of mainstream decision-making by politicians. So it's really challenging those ideas. You have to do it in a very slow and steady way and find allies from anywhere you can that actually can see that we can question the mainstream understanding of economics, and we need to, in order to build a financial system, especially the money and banking system, that actually will end up serving society. At the moment, people and even to an extent governments, we're really serving the financial sector. It isn't serving us, and yet it is created by humans in order to serve us. So really, actually, in both challenging the mainstream economists, but also empowering people, whether they're people on the ground, whether they're politicians or journalists, to question is probably like the biggest challenge, but I think the only way that we're going to succeed in the long run. So we hope we can kind of continue to have impact. Ideally, we will see definitely some central bank in the world having done things differently. Maybe that's a bit ambitious in 3 to 5 years, but I think we have to aim for that, because there's a building consensus, basically, that central banks are out of tools. They're kind of in an intellectual crisis. Low interest rates in QE does not work, and it's even making the situation worse. If we had a financial crisis tomorrow, the main central banks, the Federal Reserve, the Bank of England, the ECB, the Bank of Japan, they wouldn't have anything, they couldn't really do anything with the current tools. So we'd like to see the implementation of new forms of tools, and we It's called by economists monetary financing, which is the same as QE for the people, getting money into the real economy where real people live and work, and that can actually, boost incomes, boost employment. And I think that is possible to achieve in the time scale of 5 years, and that's like our main goal.